As the year comes to an end, there is still time to take care of some financial concerns as we look to the future. Our Alpha Money expert, Mike Koyanen from Principal Preservation Services, is here now to tell us what to tidy up before we start a new year. Hi, Mike. Good to see you.
Always a pleasure to be here, Liz. Thank you.
First, you say to consider maxing out retirement contributions if you can.
Yeah, in those employer sponsor plans, you can put up to $30,500 into that plan per year if you're 50 and older, $23,000 if you're under age 50. So it's good to understand where you are tax wise. Do you need a little tax savings by putting more contributions into your 401k type employer plan? So take advantage of that. At minimum, you should be doing your company match. So if your employer is offering you a 5% match or a 6-7% match, do enough to get that free money. Otherwise, you're giving up free money. Now, with 401ks, these employer sponsor plans, you get that contribution, that tax savings in the year you contribute, not like an IRA or a Roth where we have till April 15th next year to contribute for 2024. So you have to understand those plans are in that year, not like an IRA or 401k.
You also say to take your required minimum distribution, the RMDs as they're known, and explore possibilities for tax loss harvesting as well.
Yeah, for those RMDs, the required minimum distribution is what that stands for. If you have those IRAs, 401ks, and like kind qualified dollars, you have a minimum distribution each year. And so if you're 73 this year, I always tell people you should take your RMD, your minimum distribution this year, but actually you can postpone your very first RMD till April 1st of next year. But if you do that, then you have to take out two next year. So get in the habit of taking them every year. You can only postpone your very first one. So if you have a $1 million IRA or 401k, whatever that might be, your RMD minimum requirement is right around 4%. It's just a little under. If you miss taking your RMD, now you have a 25% penalty, which is equivalent to $10,000. You need to know where you are tax-wise for those RMDs as well. So it's important to do planning. And when it comes to tax loss harvesting, if you don't have the IRAs or you have maybe a joint account with your spouse or individual account, we call these taxable accounts, non-qualified, you might want to look at harvesting some losses or looking at, you might have had some big winners the last 2 years or this year. You want to offset that by some losses you had on maybe a previous bad investment. And some people are carrying over these losses over the years, and the most you can carry over is $3,000 a year of losses. Well, maybe you have some gains you want to offset with those losses this year and get that cost basis back down. So there's a couple things to look at RMDs or on those individual or joint accounts.
And you said it, there is still time to make tax-deductible donations. Alpha News, I know, would always welcome your donation since we are a charity here.
Yeah, a lot of these charities are counting on people to be able to help them out. And unfortunately, as we get older, we have less tax deductions, and that means we're not itemizing our taxes anymore. Majority of couples, individuals are not itemizing their taxes, especially as you get close to or in retirement, because you might have paid off that mortgage. That was your biggest tax deductions. Your kids are not at home anymore. So you're just taking that standard deduction. And I think it's a poor choice to sell money from your IRA, pay taxes on it, then gift it to a charity when you don't get the tax benefit. The proper way to do that is if you're 70 and a half or older, you can have money go directly from your IRA to the charity, and there's no taxable event to you, and the recipient has no taxes to pay. And if you're 73 and older when you do that, that counts towards your RMDs for the year. So you might have had RMDs for $40,000. You gifted $20,000. You only have to take out $20,000 more out of your IRA required minimum distribution.
So tax credits or rebates, they are still on the table too.
Yeah. And a credit is different than a rebate, but we look at tax credits maybe on solar panels or electric vehicles. I know electric vehicle and the new one is $7,500 credit. So that means if you owe $10,000 in taxes, you have a $7,500 credit, you only owe $2,500. So that's a lot better than a deduction. I think on the used vehicles, it's up to $4,000 of a credit, but yet look at what's available. You might need to replace your furnace or air conditioner, but if you're working on windows, make sure what those rebates would be on those. Even we added insulation to our house here last year, and we got these rebate forms to turn in and get some money back.
And finally, you say to check your tax brackets to see if a Roth conversion is in the cards, Mike.
Yeah, again, this is so important to know where you stand tax wise. There's marginal tax rate, effective tax rates. You have wiggle room to do some conversions. And when people are on Social Security and RMDs, we find out they're in some higher tax rates. And what happens, the IRMA tables come into play. And those are the tables that determine how much money you pay for Medicare Part B and Medicare Part D. And if you're in those higher tables, some people are paying double, some people are paying triple the amount for healthcare. You don't get better healthcare, you just get more expensive healthcare. So there's some opportunity and time right now to do some Roth conversions. So when you get in those brackets of RMD years and Social Security combined, then maybe you could be at that lower bracket and not have to pay so much money in Medicare cost. It's a big tax saving. So it's means tested, which just means the more money you make, the more money you pay for healthcare. There's an opportunity for some to start working on some conversions. And I believe with Trump taking office here this new year, it hasn't been addressed yet or talked about, but there's a sentiment that these tax cuts will be extended that he implemented in 2017.
And we'll stay tuned for the news on that. Our Alpha Money expert, Mike Koinen. Thank you so much. You head over to principalpreservationservices.com for more information. But Merry Christmas and a Happy New Year to you,
Yes.
Mike.
Merry Christmas to you, Liz, and everybody at Alpha News. Thank you.